Welcome to the webinar, Protecting Your Credit During a Financial Crisis. My name is Lisa Quorum, and I will be your host today. This presentation was originally created from the webinar, Protecting Your Credit, COVID-19 edition. Everyone has experienced a financial crisis during their lifetime, including me. In 2009, during the last recession, I was in a place where I had no emergency savings and I didn't know what my credit score was. I just knew it was bad and I had no idea where to start. With this recession, although I'm in a better place, I remember the feeling of being overwhelmed and not knowing what to tackle first. I did not have a plan. And with the state that the world is in currently, it is important for me to provide you with a plan or strategy that you can take to help you navigate your finances while protecting your credit. Regardless if you're experiencing a financial crisis due to a loss of income, an unexpected emergency expense, or being unemployed, I'm hoping that this webinar will provide you with some help in developing your plan. So based on your situation, you'll be learning to create a plan to navigate through a financial crisis while minimizing the impact to your score, your credit score. These are some things I will cover to help you develop your plan, whether it's just to determine how to pay your bills with limited income to help you weather this financial storm, or if you're employed, things that you can do to improve and or protect your credit. Have you heard the saying, knowledge is power? Well, understanding and knowing your information about your loans and your credit cards, things like interest rates, the total loan amount, are your loans backed by government agencies or are they through private lenders, are just a few of the items that you should be aware of. Understanding your credit score and the different components that are considered, learning how to prioritize your bills. There are multiple companies and financial institutions and or loan service providers that will offer hardship assistance. And based on the assistance that you're eligible for will help you determine which options you should use. Communication, of course, is key throughout the entire process. And I'll discuss some ways of things that you should do before, during, and after in order to prepare for your conversations with lenders and or service providers. And finally, understanding the terms and conditions of the agreements you make with your lenders or service providers and the overall impact that they may have. What is a credit report? A credit report is a detailed story about your credit history. It is a detailed breakdown of your credit accounts, your credit inquiries. It includes the names of companies that have extended you credit and or loans, as well as your credit limits and loan amounts. Credit bureaus collect financial information about how you pay your creditors and or lenders. And this information is reported to 3 major credit bureaus: Experian, Equifax, and TransUnion. Credit reports also include public records, things like property liens, bankruptcies, foreclosures, and lawsuits. And finally, they contain personal information related to you, your current and or former addresses, names that you used prior, and current and or former employers. When reviewing your credit report, you want to make sure that the information is accurate. You want to check things like the account status, the closed accounts versus open accounts, the payment history. Is there any duplication in information listed? You want to check your balance amount, and you want to make sure all of that information is reporting correctly. And the easiest way to obtain your credit report is through annualcreditreport.com. Now, prior to the pandemic, annualcreditreport.com would only allow you to pull 1 free credit report a year from each of the credit bureaus. Now, during this pandemic, annualcreditreport.com is allowing consumers to pull their credit report on a weekly basis through April of 2022. And this is important because if your report has if your report has inaccurate or incorrect information, it will give you the opportunity to get them corrected without paying money to review your report multiple times to confirm if the information has been fixed. So what is a credit or a FICO score? FICO stands for Fair Isaacs Corporation, and there are 5 key factors when considering your credit score. And those 5 key factors are payment history, payment history, amounts owed, length of credit history, new credit, and types of credit. It provides potential lenders with a way to determine if you are a risk or how likely you are to repay your loans and/or credit obligations. And the determination is made by the assignment of a score. FICO scores range from around 300 to 850. Scores of 650 or lower are considered problematic, and typically scores of 700 to 850 are considered good to excellent. The higher your score, financial institutions consider you to be more creditworthy. And with certain loans, this will impact the APR you receive for certain items. So for example, automobile or car loans. The higher your score, the lower the APR or the annual percentage rate. And that's just another way of saying the cost that you're going to pay for the credit that's extended to you as a yearly rate for that item. And in general, credit information reported to you on your credit report stays on your report for an average of 10 years. While making on-time payments is the most impactful to your credit history, there are other things that impact your credit. Let's take a look. Think of your credit like a pie. There are different ingredients and different measurements for those ingredients. And 5 different ingredients that make up your credit pie are payment history. This is the largest ingredient and has the most impact at 35%, followed by amounts owed at 30%, the length of your credit history or how long your accounts are open for, have been opened, at 15%, and then tied for 10% is your credit mix or the different types of credit that you have within your credit pie. So do you have just one type of credit like revolving credit, which typically would be department credit cards or major credit cards, or do you have a variety of different types of credit? For example, do you have a credit pie that has a mix of student loans and car loans and a mortgage, just to name a few? So be strategic about your credit. When you're standing in a line and someone asks you if you would like to open a credit card, I want you to think back to this webinar and think about your credit mix and whether or not it would be beneficial for your mix or for you to open that credit account. The keys to good credit are paying your bills on time, paying down debt, and spending carefully where possible, keeping old credit accounts open, and not opening too many new credit accounts at once, nor do you want to close too many accounts at once, especially if they are accounts that you have had open the longest. Now, there are types of credit that you want to avoid. And for this webinar, I'll refer to those as alternative credit. The alternative credit types would be payday loans or Title Max loans. Those are examples of high interest loans. You want to avoid those. The other thing or item that will impact your credit score is the percentage of credit used. So are you maxing out all of your credit cards or all of your available credit? And that percentage of credit used is also referred to as the credit utilization percentage. And the lower your credit utilization percentage is, the better. So how do you figure out your credit utilization rate? You take your total debt and you divide that by your total available credit. And on some credit reports, depending on the credit bureau, you may see the total credit utilization rate for each account. Up next is a video from the Consumer Financial Protection Bureau. The CFPB is a US government agency that makes sure that banks, lenders, and other financial companies treat you fairly. And this video provides tips on how you should prioritize your bills during a financial crisis.
If you are having trouble paying your bills, watch this video for tips from the Consumer Financial Protection Bureau on how to look at your situation and make decisions about your budget. Remember, you are responsible for paying your bills. If you miss payments now, you may have to pay late fees and interest, and you'll still have to make up the payments later. But if you don't have enough money to cover your needs and obligations, you can make a short-term plan to get through the month. Sometimes your plan may involve paying some bills late, or even missing a bill. Here are some tips to help you think through your options. Tip number 1, make a list of all your bills, how much they are, and when they are due. Which ones help you do important things like protect your job, such as transportation, car insurance, equipment, and childcare. Protect your housing, such as rent or mortgage payments, property taxes, home or renter's insurance, and utilities like gas, electricity, and water. Protect your health, such as health insurance. And don't forget about obligations that can get you in legal trouble if you don't pay, like child support and court-ordered fines and fees. If you can't pay all of your bills at once, think about the order you pay them in. Weigh the risks of not paying each one, then number them in the order you want to pay them based on priority. Tip number 2. Many companies offer hardship programs to customers facing financial strain. Check with your service providers, such as phone, internet, and other utilities, mortgage servicer, landlord, and insurance companies. You can dial 211 and 311 to find help in your community. Tip number 3. It might be helpful to see if you can change the due dates on some of your bills. That can help you spread out when you need to pay your bills and improve your cash flow over the course of the month. For some bills, like credit cards, you may be able to adjust the bill's due date by contacting your credit card company. For others, like rent, you may be able to split a large monthly payment into 2 smaller payments. Tip number 4. Don't ignore bills you can't pay. If you must miss a payment, call the company you owe and explain that you will miss a payment and the reason for it. Suggest a plan for how you might repay the bill or catch up. Tip number 5. When bill collectors are calling, or you're trying to decide which of your obligations to pay first, it can sometimes just seem easiest to pay the squeakiest wheel. But this might not be the best approach. Sometimes, you may need to ignore the squeaky wheel for a short time while you pay for necessities and build a plan for repayment. Ready to get started on prioritizing your bills? For more helpful tips, visit consumerfinance.gov/bills.
So as you heard from the video, you heard 5 tips to consider when prioritizing your bills. One thing to call out is knowing what you can afford. This means looking at your potential income, whether that's your last paycheck, an unemployment check, or a tax credit check or deposit. Once you have that amount, then yes, list and identify your bills that are most important for you to pay based off of the reference that CFPB mentioned. It is also important to know your options. So for example, if you are unemployed as a result of COVID-19, there are emergency rental assistance programs throughout Maricopa County to assist you with rental and utility payments for up to 15 months, depending on your income. Please keep in mind that you'll need to provide proof of eligibility. The other item to keep in mind is planning out a specific budget. And we have a crisis budgeting webinar to walk you through the steps of setting up a budget during a financial crisis. But here are some basics. Again, identifying your must-haves, which equates to prioritizing your bills. Determine which payments must be made on time, and understand what the penalties are for late payments. Is that late payment, will that late payment impact your interest rate? Will that late payment have a negative impact to your credit report? And knowing the details. This goes along with tip number 1 of listing all of the bills. Know the amounts of those bills, the due dates, the interest rates, and the loan balances. That information can be located on your statements or electronically on your main page once you log into your lender site. It is also important to understand and know the length and terms of your loan. This will aid you in not only deciding which assistance is necessary, all of those items will aid you in knowing which assistance is necessary, and will also guide you in understanding which bills you may need to delay and which assistance option will be the most helpful to you during this time. It also prepares you to talk with your lenders. When I talk about knowing your options, I'm really referring to the hardship assistance programs that are available. So for example, when I refer to utility payment plans, I'm really grouping a bunch of items under that. So I'm grouping electricity. I am grouping internet. I am grouping cell phones, all under utility payment plans. So for example, you may want to contact SRP or APS and find out what alternative plans they may have. So for example, do they have a plan that is less expensive based on the time of day that you use that plan? SRP does, for sure. The other financial assistance that you may receive for your electricity bills and your phone bills may fall under that emergency rental assistance program. So not only will that the emergency rental assistance program assist you if you qualify, assist you with paying your mortgage or your rent, it will also assist you in paying your electricity and phone bills as well. And that emergency assistance plan is only for individuals who have been impacted by COVID. So you'll need to provide proof of that, as well as your income. Some of the programs that I talk about will be programs that you may be eligible for simply based on the fact that your household is a low-income household. And a perfect example of that program, a low-income household program, would be the emergency broadband benefit. So you don't have to have COVID to be eligible for this benefit. You do have to have a household that is considered low income. And that broadband benefit covers the cost covers a temporary discount of up to $50 per month towards broadband service for eligible households and up to $75 per month for households on tribal lands. In talking about auto loans and student loans and/or mortgage, you may be eligible to defer a payment. And when we talk about deferring payments, we're really referring to pausing or stopping for a temporary time your payment on those items. So if you have paused a payment on a mortgage or school loan or automobile loan, it is important for you to understand that while your payment is deferred, your regular interest will still accrue during that time, and you may need to submit additional documentation. After your deferment period ends, what will likely happen is that your lender and/or service provider will ask you how you can bring your loan current, and they may offer you a variety of options. They may offer you an option to pay a little extra on your loan. They may tack on to the end of the loan a payment that would result in one large payment. Let me restart. They may tack on the end of the loan the deferred payment amount that may result in one large payment. Or they may have increased your monthly payments to make up for that deferred payment amount. So it's important to ask questions. Questions like, will you owe the entire unpaid amount in a lump sum once the pause period has ended or at the end of the loan term? Can the loan term be extended so missed payments are added to the end of the loan? Will your subsequent monthly payments be higher for a period of time to make up for the deferred amount? Or will it be due in one lump sum as a final payment on the loan? If you cannot make the payment arrangements that you agreed to after the pause period or deferment, it is important for you to contact your lender, as there will be an impact to your credit as a result of not adhering to the agreed payments. If you do not have any income or emergency savings, or you can't make payments, or you can only make partial payments, it is extremely important to contact your lender and/or service provider immediately. You want to check your loan agreements to make sure that you have that information that we discussed earlier on the webinar. So the due dates, the loan amounts, the interest amounts, you want to make sure you have that information before you contact your loan service provider. You also want to be clear on what payments you can make. And once you determine that amount, don't break your promise to pay. If something should change, then you need to contact your service provider immediately. And during your conversations, you want to document everything. You want to get the name of the person that you're speaking with. You want to document the date that you made the call. You want to document the amounts and the terms that you agreed upon, as well as the due dates. And If you can get a direct email address, get that email address. And as you are speaking with your lender and documenting that information, you can actually email them and copy yourself as proof of that documented conversation. Or you can keep a notebook of those conversations that you had. Regardless of how you do that, it is extremely important to document. Additional questions that you may want to ask when you are talking with your lender or loan service provider: are there penalties and fees? Will the fees and penalties be waived during this time? And will this change impact my interest rate? How will the accrued interest rate be applied to my loan? And the final item is, you want to make sure that you are only working with your loan or service provider. There's a lot of scams happening right now, fraudulent calls, emails, texts, and other offers that may be extended. Any offer that's extended to you, you want to make sure that that offer is coming from your lender or your service provider. So to recap, we started out talking about the goal of this presentation was to provide you with a plan, steps that you can take that will result in action in helping you with your finances during this time. I talked about prioritizing your bills, and you heard a video about how you should prioritize your bills. Determine which financial resources and alternative payment options you can use that will have the least amount of impact to your credit, as well as help with payments that can temporarily be paused or suspended. We talked about communicating with your lenders, loan service providers, and utility companies to determine what your options are, and not to forget to document. And finally, review the loan terms and conditions after the deferment period to determine that you can still make the payments that you agreed upon. I thank you for attending this webinar, and I hope to see you on a future webinar. Thank you.